I'm very pleased to speak with Dr. Rifat Ahmad Abdel Karim, the Secretary General, the first Secretary General of the Islamic Financial Services Board, a post that he's held since the IFSB started in 2003, and I'm interviewing him at a time when he's about to step down as Secretary General of the IFSB. It's a great pleasure to be able to speak to you today.
Pleasure is mine. Thank you very much.
2003 and now it's 2011.
Yes.
In that time, what would you consider to be your top 2 or 3 most important achievements as Secretary General of the IFSB?
I think 2003, not many people knew about, or organizations knew about the IFSB. Today, you cannot speak about the Islamic financial services industry without mentioning the IFSB. Number 2, I think we provided a platform for many regulatory authorities, international financial institutions, to anchor, their interest at the IFSB. We started with only 9 members. These were 8 central banks and Islamic Development Bank. Today we have 195 members, comprising 53 regulatory and supervisory authorities. In fact, by the end of this month, this number of regulatory authorities should increase to 55. Now, these include Central Bank of Japan, Central Bank of China, Singapore, Hong Kong, South Korea, Luxembourg. These are new entrants to Islamic finance. And I think, had it not been for the IFSB, perhaps these regulatory authorities wouldn't have been encouraged to come on board to Islamic finance.
You've succeeded in bringing a whole range of institutions, both Islamic as well as you just mentioned, large countries which have Islamic populations but which are essentially secular, onto the table together. Would I be correct to say that your first mandate was to seek some form of harmonization between the disparate Islamic regimes in financial services?
Well, even our Articles of Agreement, the first objective states that we should adapt to existing international organizations, existing international standards, which means that we should not reinvent the wheel. We have to start, for example, in the banking, where the Basel Committee has ended, in the capital markets where the IOSCO has ended, and insurance where the International Association of Insurance has started. So we take their standards and adapt it to the specificities of Islamic finance. So that's our mandate through our development of standards, prudential standards, whether for the banking, capital markets, or the insurance sector, right? We hope that this will enhance the soundness and stability of the financial system in the jurisdictions where institutions that offer Islamic financial services operate.
And in the time that you've been Secretary General and trying to put this harmonization between what is considered secular global standards or the mainstream standards and Islamic finance, do you think that you still hold to the view that parallel harmonization in a way is still a goal worth pursuing, especially after the global economic crisis where the Western world appears to have changed the rules somewhat, in terms of safety and soundness of financial services?
Yes, we do, because this emanates from the business model of the institutions to whom we are providing these standards to harmonize their regulatory practices. The business model, for example, for an Islamic bank, right, comprises many jurisdictions of commercial and investment banking without legal, financial, or administrative separation, right? On the mobilization of funds, they are allowed to mobilize funds on investment accounts, which is based on profit sharing and loss bearing. This is not the business model of a typical conventional bank,
That's
which
right.
is based on borrowing and lending.
Yes.
So
why seek harmonization that way?
In order for them to have this industry be integrated into the global financial system, You cannot just have a system by yourself, operating in isolation from the rest of the global financial system. Now, in order to do that, that's why we start with, for example, Basel II and now Basel III. We take Basel II and adapt it to the specificities. Why the specificities? Because if you don't, then maybe a lot of risk would slip the supervisory net.
But in reality, is all of Basel II transportable to an Islamic finance model? And doesn't that put restrictions on the commercial application of Islamic finance in terms of capital? And in fact, even in terms of the understanding of what risk is and how much capital to allocate to risk, there's already a fundamental difference.
True, but then let's take Basel II. Let's take Pillar 1, for example. We speak about credit risk, market risk, and operational risk. If you apply the same concepts of risk to Islamic finance, let's take the plain vanilla murabaha, which is a sale on credit, right? Now, the bank has to acquire the asset. By acquiring the asset, it is exposed to market risk. The minute it sells or leases the asset to a customer, that market risk, it transforms into a credit risk. Now, Basel is silent on this transformation of risks, whereas we speak about it. That's how we adapt it to the specificities.
And so in your conversations with the Bank for International Settlements, for example, do you feel that you've been adding this dimension to that conversation? Are they listening?
Oh, yes, because in fact, we sit on now, we're represented in the Basel Committee for International Liaisons. And we've recently been invited even to sit on the committee that is drafting the core principles, revising the core principles, which shows that we are working together and in close relationship. They value our work, it caters for a growing industry, sector in the market. You don't want to be silent on it, right? Rightly so, the Basel Committee is focusing on the conventional side. We're focusing on the Islamic finance side.
Well, the global economic crisis, once again, exposed the issue of liquidity risk in commercial banks. How's that being attended to for Islamic finance? And is it realistic to expect that there won't be an equivalent crisis in the Islamic finance world once it becomes of a certain size? Operationally?
Okay, two aspects to that. One, after the Basel Committee issued its liquidity management standard, we started working on a standard on liquidity risk, right, to adapt that to the Islamic finance service. Number two, the IFSB spearheaded the establishment of the International Liquidity Management Corporation, the ILM, basically to address, liquidity management issues in institutions that offer Islamic financial services. This organization is mandated to issue high-quality financial instruments that would help, institutions that offer Islamic financial services to manage their liquidity in an efficient and an effective manner. It was launched last October. The IFSB facilitated, that launching, the development, everything of that organization. 12 central banks and 2 international multilaterals have signed, the articles of agreement. That gives it a very good kick up to,
So regulatory-wise, regulation-wise, and infrastructure-wise, it seems to be in place. But the actual practice of creating liquidity in a time of crisis, Islamic banks would generally be at a disadvantage to their commercial equivalents because they don't have the resource to liquid capital markets and liquid instruments.
Well, that was in the past, not after the creation of this organization, because if this is high quality, let's say 2 or AAA rated sukuk, right, they can sell them. You can always sell a AAA and easily than, your other non-liquid assets. Number two, we hope that in the future, those members who have signed articles of agreement will also use these instruments in their monetary policy, right? They can hold some of it, for example, and then whenever needed, they can either sell it if there is a need for that, or buy it from, the financial institutions to help in, facilitating the liquidity management of these institutions.